What's up, guys? This is Dex from Marfoogle News, and I have some concerning news regarding the coming financial collapse. And stick around, and I'll tell you the top 5 warning signs of a financial collapse, and you can be the judge if we're on the brink. But let's catch up right now on what's happening in the current news. We have 2 significant bank collapses this week. Before I go into the details, let's cover some bases here. What is a bank collapse? A bank collapse refers to a situation where a bank cannot meet its obligations to its depositors and creditors, leading to its closure or insolvency. It can occur for various reasons, such as mismanagement, fraud, economic downturn, or a run on the bank by the depositors who fear that the bank will fail. Bank collapse may have far-reaching consequences for the economy, including the loss of jobs, decreasing in credit availability, and the decline in consumer and investor confidence. So what is a bank run? A run on the bank occurs when a large number of customers withdraw their deposits from a bank, typically due to concerns about the bank's solvency or its ability to meet its obligations. A bank run can quickly deplete its cash reserves, making it difficult or impossible to honor the withdrawal request. This can result in the bank's failure, as it may not have enough cash to cover all its deposit obligations. Bank runs can be triggered by a variety of factors, including rumors about the bank's financial health, news of a major scandal or fraud, or a sudden economic crisis that undermines the public confidence in the banking system. What about protection? FDIC insurance offers depositors protection up to $250,000 per deposit per issued bank for each account ownership category. If a bank fails, the FDIC will reimburse depositors for their losses up to the insured limit. Insurance obviously gives depositors confidence in the banking system and helps prevent bank runs, which can destabilize the financial system. So what happens when a bank is taken over? So when a bank collapses and the federal FDIC takes it over, it means that the bank is unable to meet its obligations to its depositors and creditors. The FDIC, an independent agency, is protecting the depositors and maintains the stability of the bank. The FDIC steps in to ensure the depositors don't lose their money. Again, insured up to $250,000 per deposit. The FDIC creates a separate entity to hold the insured deposits and transfer them to either another bank or multiple banks. And the FDIC may also sell some of the bank's assets to recoup the losses. When the FDIC takes over a bank, it may be closed permanently or it may be sold to another bank. In some cases, the FDIC may also provide financial assistance to the acquiring bank to help it absorb the failed bank's assets and liabilities. Overall, the goal of the FDIC is to protect its depositors and maintain stability in the banking system. So with all that out of the way, what's going on? 2 banks have gone bust in a significant blow to the U.S. banking system. The collapse marks the biggest bank failure since the 2008 financial crisis and have sparked fears of a financial contagion. With the collapse of 2 banks in just a matter of days, many are now asking which bank will be next to fall. As we dive deeper into this financial crisis, the question on everyone's mind is, could a wave of bank failures be just around the corner? So let's get into it. Silicon Valley Bank, one of the leading lenders in the tech sector, is being shut down by regulators after concerns about a potential crisis led to a run on the bank's deposits. This is happening right now as we speak. The California Department of Financial Protection and Innovation announced the closure, and the FDIC has been named as the receiver. The FDIC has set up a separate entity to transfer all the insured SVP deposits. This marks the biggest bank failure since the 2008 financial crisis and the second largest on record after Washington Mutual collapsed. The closure comes after trading of SVB shares was halted on Friday morning after they fell by double digits before markets opened. The bank is the 16th largest in the country and is known for its tech-focused strategy. It has helped finance many West Coast companies in the tech sector, and many of its depositors are tech startups and venture capital funds. So what happened? Silicon Valley Bank had announced earlier this week that it had sold $21 billion of securities and proposed to offer over $1 billion in shares to fundraise for general corporate purposes. This raised eyebrows amongst investors who worried that the bank needed to raise so much money abruptly. It also sparked concerns amongst depositors who quickly began pulling their funds out. Numerous VC funds, venture capitalists, including major players like the Founders Fund, Union Square Ventures, and others, had advised companies in their portfolios to move their funds out of SVP to avoid the risk of being caught in the potential failure of the bank. Now, I have spoken with some of those early stage companies that are venture backed who do have money in SVP. And I actually talked to one who literally just got his money out yesterday in hopes that he wouldn't get caught in the bank failure. And he was lucky enough that happened. Very lucky for them. SVB, Silicon Valley Bank, has been a major player in the tech startup space, having developed relationships with the VC communities for over 40 years. It provided traditional banking services while also funding tech projects. It's considered the backbone of the venture capital industry in the U.S. The closure of this bank is a significant blow to the tech sector, which high interest rates and economic slowdowns have already hurt them significantly. So this week's concern about a run on SVB led investors to dump other bank stocks, so including First Republic Bank, PacWest Bank Corp, Western Alliance Bank Corp. All of these publicly traded banks are taking a hit. Now get this, just 2 days earlier, Silvergate, the crypto bank, collapsed. The bank was where most of the big crypto firms went because traditional banks did not want to do business with them. And that reluctance stemmed from warnings of regulators who considered the crypto industry a risky sector. The company said on March 8th that it intended to wind down operations and voluntarily liquidate the bank in an orderly manner and in accordance with the applicable regulatory process. The route of the La Jolla, California bank was due to the pressure from regulators, in particular the Department of Justice, which had opened an investigation into the business relationships with the empire of the former crypto king Sam Bankman-Fried. So SBF is the reason, one of the main reasons why Silvergate collapsed. Silvergate was established in 1988. The bank initially specialized in lending to industrial customers. At the time, it also offered loans for both residential and commercial real estate. But in 2013, the bank began to court crypto firms when traditional banks were reluctant to do so due to the opacity prevailing in the sector. Silvergate thus became the crypto bank. In 2019, the firm made its initial public offering, promising complete refocus on the industry, which was experiencing the renaissance, as they called it, of crypto. As of September 30th, Silvergate had $11.9 billion in digital assets held as deposits. But the bankruptcy of FTX and Alameda in November 11th scared away customers, and the bank thus reported only $3.8 billion in digital assets held as of December 31st. That's a huge drop in a short amount of time. By the way, FTX was one of Silvergate's biggest customers. So where does this leave us? There are concerns that the issues facing Silicon Valley Bank and Silvergate could spread to other regional banks in the U.S. In fact, economist Peter Schiff, who's known for his dire predictions, has warned that the U.S. banking system is on the verge of a much bigger collapse than in 2008. Banks are said to own long-term paper at extremely low interest rates, and they may struggle to compete with short-term treasuries. In other words, if depositors start withdrawing their money from a bank to get a higher yield somewhere else, it could result in a wave of bank failures. This is a situation that regulators and the banking industry will need to monitor closely to avoid any further instability. So now that you're caught up on the current situation, we've got two major banks collapsed. We've got a lot of things happening in the economy. Let's talk specifically about what are the top warning signs of a financial collapse. Number one, an unstable, overvalued stock market characterized by high levels of volatility, overinflated asset prices, or unstable levels of debt. I think we can check that box. We've been there, done that, and I think our stock market has certainly had its day of overvaluation. Number two, a sharp increase in interest rates, which can lead to high borrowing costs, decreased consumer and business spending, and increased defaults on loans and other financial obligations. Well, hello, we're here too. Has anyone checked the latest rates on a home mortgage? Has anyone looked at your variable rate credit cards and seen how much higher the interest rate is? Interest rates have gone through the roof. And they've done that to try to help balance the economy. But yet, here we have it, number two sign, of a potential financial collapse. The number 3 sign, economic recession or stagnation, characterized by low or negative GDP growth, high unemployment rates, and decreased consumer and business confidence. I think we're very clear on that decreased consumer and business confidence. And I think we definitely see a recession. Everyone has talked about the fact that we are on the verge, if we aren't already, in an economic recession. So number 3, check. Number 4, political instability or geopolitical tensions, which can lead to increased uncertainty, decreased investment, and decreased economic growth. Ding, ding, ding. We got this one covered too. We have the most political instability I can remember. I think it's clear we're on the verge of potential war in Europe, in Asia, in the Middle East, the potential World War III, as some are wanting to call it. This box is checked. Political instability and geopolitical tensions are through the roof. Number 5, systemic risks within the banking or financial system, such as the collapse of major financial institutions, widespread insolvency, or the breakdown of functioning of key financial markets. We are just talking about 2 major bank collapses. This is it. We've hit all 5 of these key indicators that could potentially be warning signs of a financial collapse. So there you have it, folks. Tell me what you think. I think we've clearly hit all 5, but what do you think? Do me a favor, leave a comment down below with your thoughts about these events, about the state of the economy, and about where we're going and what you think's happening next. Make sure to like, share, and subscribe. It goes a long way to help us. We really appreciate you. And I'll keep you guys updated if we get any more information about the financial system, especially as it relates to the banks. I wouldn't say go out and grab your cash unless you happen to be at SVB, but you can't do that now. It's now been closed. You'll have to wait till the FDIC tells you how to get your cash. But I think you're probably fine right now, but you definitely need to pay attention. It's always good, in my opinion. This is not financial advice. I can't give you financial advice. But in my opinion, what I do is I make sure to have, my money spread out in lots of places. I have some cash, I have some money in the bank, I have, some silver, I have some other tradable items that are valuable in dire times when people may need things. So make sure you've got, your ducks in a row right now. But again, I don't think it's the time to run out and do a bank run by any means. But do pay attention to what's going on. If you want more, stick around. Again, this is Dex, Marfoogle News, and I'm out.
Again, EMP shield. If you do want to protect yourself against any kind of electromagnetic pulse, all 3 phases of an EMP are covered with this. Or a CME, this device can ground the signal in less than 500 trillionth of a second before it's able to fry your devices. This can be there's different devices for different things. You can get one for your cars, your trucks, your motorcycles, your boats, your generators, your gas generators, your solar generator, if the Flex is the only one you can actually get it for. But again, you can also get these for even your ham radio. So if there's something that you want to protect, you can wire an EMP shield into it, and it will protect it. This is Keystone military tested. It's used by agencies like DHS, DOD, and of course now they're on the DEMSO team officially helping the Texas grid. Go to marfooglenews.com/EMP. Not only will you save our grandfathered in $50 off, but the great part about our discount is it stacks on top of any sale that they're running. On top of that, you get to help our channel at the same time. We're independent. We don't have a multi-channel network. We've never done one. And we are on our own. So thank you, Marfia, for helping us and for keeping us going. Thank you.
Looking outside of my window, seeing a crescendo. I'm not going out there where apocalypse roams. Looking outside of my window, seeing a crescendo. I'm not going out there.